Hi there, traders, and welcome to Trade the Structure and the morning recap for the US. It's the 25th of Jan 2022. So we're going to look at the big bounce last night, the key levels we'll be watching. Now, indices really are starting to top, especially in the US, and there's big talk of obviously interest rates, which is really killing. And there's a few other things, obviously, creating a bit of fear that this market's going to sell off, and it's kind of self-fulfilling at the moment. We saw a big week open on the US the overnight after a weak European session, but there was some key levels where I was watching it on the open, and you could see that they were just setting up to trap some shorts before a bit of a squeeze later on. Now, it could be just based on some bargain hunting. There's not a massive amount of news out last night that was going to trigger that bounce. I think it was more that everyone was sort of positioned short. So you got short sellers diving in because really, as you can see, this is the daily chart we're looking at. The S&P, that trend up has been broken. Okay, so we've made that high, that channel's broken. We pushed into that support, and that's where the open was off that support. That support zone around 42.55, and we had that bit of a bounce, like I was saying. So there was some bargain hunting popping in there, just squeezing out some of those sellers. I don't think this move down has by any means finished. I think there is still, obviously, we've got FOMC out. I think it's over next couple of sessions, and they'll be talking about interest rates, whether we get a confirmed interest rate rise for March or not, or what we can expect going forward for this year. I think inflation is actually around a 7 or 8% mark in the US at the moment, so they've got to cap that sooner or later. So there has to be some rate rises very soon. That's what's spooking the market. Higher cost of debt means less money to throw around into the markets, which are already extended, okay, for growth. Anyway, so we'll just look at quickly the three majors: the S&P, the Dow, and the Nasdaq on the dailies, and then we'll drill down into 30-minute charts on just the action from overnight. So you can see that's the big S&P, broader market. That was your trend channel, which everyone was been buying the dips for that for so long, and now it's finally there's no buying the dip, and it was that push down to that support zone around, like I said, 42.30 or so, and that bounced last night. The Dow, same sort of area. It was pushing into a little support zone through here last night as well, trapping some sellers. It would just flushing through that level. You can see trapped some sellers and then bounced savagely. So it was down around 500 or so, 600 points on the open before it bounced, and it's ended up up 0.3%. You can see up here, up nearly 100 points. So yeah, good rebound. The Nasdaq, same sort of scenario. Whether that was, I don't think this is a buy the dip scenario. I think it's a bit different, and that's that longer term trend up in the channel, broken down out of that channel. So whether we get some sideways action, we might obviously get. I would be looking for a bit of a grind up, and then potentially if we start to get some sort of, like this, especially on the Nasdaq, we get that, then I think there's going to be a bigger move down. We'll have to wait and see for now. Let's just go down to the DAX. Actually, while we're looking at it, the DAX is in sideways, and it's the same thing. We've had this big bounce in the pandemic sell-off. That's a low back in 2020. Had that big rally, and then since it's been going sideways in a broader range for quite a while now. Now that's not conducive, going sideways and then we rally back up. I think there's going to be a lot of heat coming out of this DAX sooner or later. Now, expect, if you're going to look at the open tonight in the European session, expect a big bounce on the DAX in the UK because they were closed well and truly on their lows, after taking the hammering before the US bounced. All right, so I don't think they've got a bit of catch up to do anyway. And the UK, that's a FTSE. You can see when it catches up. That's it's been in an uptrend as well, but it's still in its channel really. It's been capped, around this level, around 75.87. So if there is going to be a sell-off, expect the FTSE to go with it. It's just whether it can push down here and start to find some support into this zone, potentially 6,931 or 7,000. Now that's only a couple of hundred points away. It could easily, if there's going to be a bit of a meltdown, don't expect that to hold. Don't chase, start to pick bottoms. But for now, that is still, this level here. It's finished off quite nicely. So I do expect that sort of minor uptrend to, at least hold tonight. Maybe we'll pop back up, but it'd be the lower high. If we start to come into a lower high, something like this, then that's going to drive us lower. Okay, so let's get over to the 30-minute charts and just look at those action. Look at that action. There you go. You can see that's the back to the S&P. That was that big push into that support. So we opened, flushed into that support level, just trapping some sellers because market's negative. The market's down, has been down in the last few days, but very extended on the minor time frames and the short time frames. On the daily, no, but on the longer term, the shorter term time frames, yes, it's extended. So that's where you're looking to just be careful. You're not really wanting to sell into support levels, key support levels, and that's going to trap a lot of people, especially when it starts to get through. People are expecting, okay, that's pierced through support, but instead it's just a trap. sucker in some sellers, and bounce straight back, and you can see that nice little pop up, higher low. That's what you're going to trade off. So really, the T ways I'll be trading off something like that when it's so extended. You're either looking for a deeper push, retest, and then go, okay, or you're just looking for that push, exactly what happened, retest from the outside, and then go, and you go higher low here, buy into that, sell into that. Okay, simple as that. You've got the Dow, similar sort of scenario, pushed into that sort of support zone, longer term support zone. And that's a support zone for quite a while. It's tested into that level for quite a while now, but before it was in an uptrend. Now I think we're at least looking at some sideways consolidation. Why they talk up interest rates, or what people, when they figure out what's happening with interest rates, or we're going to start to chop around. So we're going to just chop around this level, or we just start to roll over. Okay, but for now, I don't think that uptrend has taken a bit of a beating. There's going to be a lot of bulls that are a bit concerned about that. People want to lock in profits, all that sort of thing. Whether the economy is growing or not, it's a different story, because that's been factored in. It's just what's going to happen, whether it's going to go sideways and start to chop around, or we're going to start to sell off. All right, but that's the action. You can see that high low formed, squeeze out all these sellers. It's probably going to squeeze a bit higher. I don't know where. We'll have to see what happens tonight. But yeah, for now, it's looking to squeeze off that level, squeeze out some of these sellers, and potentially some more bargain hunting coming tonight. Nasdaq, same sort of scenario, pushed into that major support, and we've got that high low that's worked off. All right, let's get down into the ASX for ASX traders. You can see we've been short this for quite a while now. We've been short from about on the CFD 73.25, and it's already locked into partial into around that 72 mark. In hindsight, it was a bit early, but this is still looking relatively negative. If you get onto a daily here, you can see it's sideways at the moment. We've got a confirmed double top. Okay, that double top there, we've got our shoulder or lower high come into play. That's why we pushed it down to, we're getting onto that short, back into that 72 area. It's flushed through. Whether it's going to flush, pop back up and hold another lower high, keep going down, it's going to be a bigger move, but I wouldn't expect too much from the bullish action at the moment. I think this market's going to work itself out before you want to get long. Longer term, I wouldn't be bargain hunting in this kind of price action. All right, we'll get back to the 30-minute, and we'll just get on to the other charts. Dollar index, it's working its way higher. A bit of safe haven buying there, and a bit of yield play as well for the US dollar as they look to raise rates. People will be buying that as an offset. So you'll be buying the US dollar for yield compared to say the euro, other markets that are going to raise rates slower. Okay, US dollar, euro. Now that's it's coming to the support zone. It's broke it. I've had this trend line more on the longer term chart. Here we go. A bit of a longer term move. So I'll be looking, if anything, for this zone through here to hold, which is at 113.59. Maybe a bit of a creeping up during the Asian market session into the UK session, and then see what happens to the US dollar. If the US dollar keeps going, it's going to pressure the euro lower. Whether we get some more pressure lower on the euro, but for now, I'll just be looking at 113.60 zone through here to see if that can hold, and then we can get a lower high and get an extension on that down move. Pound, big flush into this, this level in here, and this is a major support area. We're not going to take a look at it just for now, but you can see that for me, that's your downtrend. We've broken up and out of that downtrend. We're in a pullback mode longer term, but on the short term 30-minute chart, it's a bit of a flush. We might get, I'd be looking for anything if this starts to hold in here. I'd just be looking for a higher low. Higher low can work for a bit of a squeeze on these sellers. Okay, Aussie. There we go. It's broken through this level at 71.33. Major support at around 7,000, say, 70.50. Major support there. It's still looking like potentially holding that lower high. Okay, off 72.78. This lower high through here. It's just whether we get a bit of a bounce into here. Look for something potentially. You might find it test into this area. 71, 74, 75, test in here, then sell off again, or whether we start to, so it's basically two scenarios from here. If we can start to push up here, I'll be looking for something off that, or if we start to press higher, retest there and go, then something off on the long side to a bit of a squeeze on those shorts. But for now, I think it's longer term, it looks like it's rolling. It's getting that rolling over sort of price action. So whether it's going to hold a lower high here and go there, I'll sort of favor that area because I'm favoring more upside pressure on the US dollar, but maybe not tonight. It's one of those things. I think you've got a good bounce in the US indices, taking a bit of pressure off the dollar rally for now, but everyone will be waiting to see what the FOMC say, what Fed Powell says about interest rates in the next couple of sessions. US yen, that's a bit of a problem. You've got obviously safe haven yen buying could be offsetting any rally into the US dollar. So that's why you get this movement creeping down. You've got some support potentially in here for today that could come under fire around 113.50, or we're going to start to creep off that level and work our way high to squeeze out some of these sellers. Okay, you've got sellers in here, good bounce, sellers in here reacted back off the same level. Whether we get a bit of a squeeze on the shorts through here and a bit of a high low to work off, we'll have to wait and see. Okay, so probably just be looking for this sort of zone in there. If that starts to break, I'll be looking for something, maybe retest and then go. Okay, but for now, it's all about what's going to happen with the US dollar. Gold, spot gold, I'm seeing more of a contained action around 1840. Okay, the sellers have been contained around the 1843 level, and we've got a high low. It's been held around that support level there through. So that's kind of the range I'm looking for. I'm not looking to buy it just yet. I wouldn't mind seeing a bit of a flush retest to this level 1843 and then buy off a higher low, because I think that could just as easily start to creep down and test at the lower end of that range back around 1830. So for now, the price action still, it needs to do some work, but I think that you can see the momentum in the longer term starting to ease from that selling pressure. It's starting to consolidate. Maybe that sideways action is going to consolidate and start to move off a higher low and pressure higher. We'll wait and see. Don't bank on it being an inflationary run, because talking up inflation for a long time now, and this keeps getting sold into. So it's not just an inflation hedge. You could easily get squeezed. It's more based around the US dollar. But longer term, gold actually looks pretty good. Crude oil, taking a bit of a hit off the highs. This is daily resistance zone through 85. You can see it flush through, pull back, got a lower high on the daily time frame, and now it's heading south. It's probably, actually, we'll just look at this daily chart. That's that level and through there, longer term uptrend, obviously, but we've been pushing into this level at 62. Maybe we're going to react lower off there. It's got some work to do to squeeze out some of these longs through here. These longs have built up in that daily. Getting a bit peaky up here. We're getting a bit running out of steam. You can see on this is the daily MACD, which is a shorter term, quicker moving one, starting to peak out here, starting to roll just when it's starting to flatten out on the longer term weekly MACD, or the momentum anyway. So maybe what we're seeing here is just a bit of a pullback, bit of an easing, see if we can hold a higher low, something more key, okay? We might be getting something on this. I don't know if we press all the way back down into this 62 area, but for now, this rally is starting to get a bit long in the tooth, especially into these highs, okay? And if we start to go back to that 30-minute chart, that's what that's sort of saying, okay? The fact that we've got through that low, flush through and we're bouncing now, it leads me to believe we're going to get more of a grind. You might just get a bit of a pop up here, and then a bit of a grind, take out the lows a bit, and then that back and fill action again. But overall, it's grinding lower, which means that I'd say bulls are still in charge, longer term anyway. Copper here on the daily chart, we've got that resistance up here at 460. Wanted to see if this can hold. I thought we might have held right back in, held and expanded higher. But for now, that rally in the US dollar is capping in too much bullish action. So we have to just keep an eye on the US dollar for now, see what happens. Could be sort of rangy through here. We might hold a bit of a pop into this level, 448. We might extend that level. For now, I'm only going to be wanting to work off levels for now. Work off this. See if you get this pop down to here, you get a higher low to work off, fine. If you push up into this zone, you start to get a lower high, work shorts. Simple as that. Bonds have bounced a bit. Obviously bounced last night with a bit of a squeeze on yield. So I think they were overcooked. We spoke about this before. That's the short term. Then in 10 years, same sort of scenario, bit of a bounce, flash into the close there. But generally, they're a bit of a squeeze higher. I think longer term bonds are more susceptible to longer term interest rates, and they may be still factoring in more rate rises. But the short term, you got here the 2 years, are factoring in really what's going to happen in the shorter period. And I think obviously it's probably factored in a bit too much. You've got a bit of a bounce in yields. Yields have been rallying. They're falling from their highs, bit of a bounce in the bonds, sorry. Yields just pulling back from the highs, but we'll have to wait and see. I still expect that that's relatively factored in at the moment in the bond market. It's just whether what Powell says, if he says inflation is still out of control, they need to play catch up, then you might see those bonds tell over and roll over again. All right, that's pretty much all I want to say, guys. Have a great day. Good luck with your trading, and remember to take a look at the website, www.tradethestructure.com. There's more information on there, and have a great day.